Some people think that dividend stocks are boring. They are not. Depends on which ones you go after. And we're going to be talking about 5 dividend growth stocks that I like for the month of July. Full disclosure, I own all of them in personal and managed accounts. They are great, great companies, and I am going to show you why. Hey, I'm Luke Downey. I'm co-founder of MAPsignals.com. We don't follow the news. We follow the big money. That is how you find some of the best stocks out there, literally on planet Earth. So if you'd like this type of unique content, make sure to like and subscribe because we want to make sure that you like this type of content. So let's go ahead and get into it. We're talking about dividend stocks. There's a lot of great ones. A lot of people think that dividends are, for grandpas and grandmas. That just isn't the case. If you can find a growth stock that actually pays a dividend and they raise it year after year, pay attention because that's what we're going to be looking at today. And let's go ahead and get into the number 1 dividend stock for July. And that is Domino's Pizza. I love their pizza. I did as a kid. I still love it to this day. They've got great prices. And when you walk into a Domino's store, you can notice it's not like your old school pizza joint. I mean, this thing is high tech. This company is doing a lot of cool stuff. So first of all, since we're the big money guys, I want to go ahead and show you what our big money signal looks like. So this is a 1-year chart of Domino's Pizza. So these big green sticks, that's the buys, and the red, that's the sells. So typically you see more buys that come together. You see more sells, they come together, up and away. Stock's been doing really great. But how do you know when you can find a great stock? Well, I like to spread the chart out a little bit, go back to say 2015, look at a good 5+ years of data. And then we can see the times that Domino's was actually a top stock for MAPsignals. How do we do that? Well, we have this cool power signal. That's the electric blue right here. So these are the times that Domino's was one of the highest ranked stocks for my research firm. What does the highest ranked stock means? That means it's got great fundamentals. It means they're beating their earnings, they're beating their fundamentals, they're raising guidance year after year. They've got great technicals and they have this big money signal. And why is big money important? Because big investors usually have some of the best research out there and they just know how to latch on to some of the best stocks out there. So the more times we see a stock on this report, the better. Domino's Pizza is a great one. This is how I found it years ago. It continues to treat me right. But let's go ahead and look under the hood together and see exactly why I like this stock. So it's a discretionary name, right? It's all about pizza, food. Share price, it's not small, $463. The market cap is just under 18 billion. So it's not that big, which is really great. So that probably means there's going to be a lot more appreciation in the years to come. For 1 month, remember I was talking about technicals? Stock's up about 9%. Year to date, it's up 21%. How many times has it been on that big money report? 6 times since 2015. Their last dividend raise, get this, 23%. It's the last time you got a 23% raise. I'll wait. It's been a while, right? Their forward yield it's tiny. It's 0.82%. But in an environment like this where rates are effectively zero, this is a good place that investors go to, and that's dividend growth. And their 3-year earnings growth rate is 28%. Why do I look at earnings growth? Why is that even important? Because the more a company earns, the more they can pay in dividends. And that is exactly what we want. So number 1, Domino's Pizza. Now I want Domino's. But we must go on. We have to go on to the number 2 dividend stock. Share my screen again. And let's speed up this process a little bit. And the stock is Lam Research. Looks like a lonely chart. Let's go ahead and fire in those signals real quick. Bada bing, bada boom. What do you see? The stairway to heaven. Look at that. The more electric blue, the better for your portfolio over time, typically. So Lam Research is a great semiconductor name. They have all the tools for making all the components. A lot of people use them. And right now with the semiconductor shortage, they are probably primed to do really well. But again, let's go ahead and look under the hood together. Lam Research, full disclosure, I own this in personal and in managed accounts. It's just a great company. Share price is right around $650. Market cap's about $90 billion. The The 1 month return's basically flat, but year to date, it's up about 38%. But here's that holy grail thing. How many times has this stock been on our top 20 report since 2015? 43 times. Dude, that is lights out. That means this thing is amazing status. The last time they gave a dividend raise, it was up 13%. I'll take it. Their forward yield is just about 0.82%. Look, for a growth stock, that is great. And their 3-year earnings growth is 15%. So look, it's got everything that we want when we are trying to check the boxes. So Lamb Research held it for years. I plan to hold it for many more years. So let's go ahead and get into our number 3 stock. Dun, da, da, da. It is none other than the second largest company in the world. That is Microsoft, another tech giant. And why do I like it? Well, we got to look at the big money first. We got to start there, right? And you can see all of these blue signals. I like to call that the stairway to heaven. A lot of people, they like to look for stocks going down. I have never found that that works. I want to see stuff bursting, going higher and higher and higher. Microsoft is doing that. But what else do we have to do? We got to look under the hood. So Microsoft, technology stock, we all use it. You know, they've got some of the best software out there. I'm using it right now with Excel. Could you imagine your life without Excel? I sure as hell can. So look, share price is $270. Their market cap is $2 trillion. I think when I bought this stock, it was 500 billion. And I was like, oh, when's this thing going to go up? You know, I mean, how much more can it go? Look, it's already up, you know, multiples of that at 2 trillion. So look, don't be surprised at how high great companies can go. And Microsoft is probably one of the best companies ever to have existed. So can't say too much about it because it's so great. For 1 month, growth stocks have been up. So is Microsoft. It's up 7.63%. Year to date, it's up 21%. How many big money signals? 23 since 2015. Their last dividend raise was just about 10%. Their forward yield sounds familiar. It's 0.84%, but a company that's growing this fast, I mean, it's just, it ticks all the boxes. And then look at this. Look at their earnings growth. 3-year earnings growth rate. This is as of FactSet data, 43%. How are you doing? I mean, look, you don't have to complicate investing. Just look for 3 things. Great fundamentals, great technicals, and big money. You don't need to spend time doing other things. I'm telling you, this is how we do it. It's been working. I think it's going to work in the future. We got to get to number 4 though. Starbucks. When's the last time you had a great coffee? For me, it was this morning. You know, when I go and I meet with people and they're like, hey, let's go grab coffee. We always think, let's go to Starbucks. We don't think of anywhere else because it's got that great ambiance. You sit there, you're in those big, you know, fluffy chairs. It's just great. And the coffee is really good too. But more importantly, stairway to heaven. I've owned this one in personal managed accounts for years. I think this thing is going to explode higher with the reopening that's happening. So it hasn't had a lot of big money signals recently, but just give it time because I think when people start to get outside a little bit more, they are going to want to spend money. And you know what they're going to do? They're going to go buy coffee because it's fun. They're going to go hang out with their friends. So it's a discretionary name. The share price is $112. The market cap is 133 billion. Month to date, it's down about 1.5%. Year to date, it's up about 6%. How many big money signals since 2015? 17. That's what we want to see. Their last dividend raise was right about 10%. Their forward yield is actually much better. It's 1.61%. So in a low yield environment, that is actually really nice. Now their 3-year earnings growth got penalized with the pandemic. They, you know, no masks, no coffee, nothing. You know, they had to close a lot of stores. So their earnings got dinged, but remember the world is reopening and they are going to have coffee with their friends, their girlfriends, their boyfriends. And that is why it's a great stock. It will bounce back. I really believe that. So let's go ahead and look at the last company that is not going to be a tech company or a discretionary name. It is going to be a real estate name. And I think this is one of the best real estate names over the past few years, and that is Extra Space Storage. I've held it personally and in managed accounts for a number of years. And it's got the seeds of greatness. You see those big money signals. And also just REITs have been on fire this year, right? With all the tax hike scares and all of that, REITs have been just a bellwether, just done really well. Extra space storage always tends to float to the top whenever REITs are getting bought. Got to look under the hood to see why that is. Why would extra space storage keep floating to the top? So let's look. Real estate stock. What do? They basically have all these, you got a bunch of junk laying around. You need to go store it. Don't throw that stuff away. Don't donate it. Put it in storage, extra space storage. Share price is about 165 bucks. The market cap's about 22 billion. In 1 month, it's up 11%. Year to date, it's up 45%. Love that, guys. Bet on the winners. How many big money signals since 2015? 6. Stairway to Heaven, the electric blue right there. Last time they raised their dividend, it was an 11% increase. Wham, bam, thank you, ma'am. Their forward yield is 2.4%. Their earnings growth is basically flat over the past 3 years. That is common with real estate companies because they have to distribute all of their profits. That's what makes them a REIT. So look, dividends are awesome. You just got to know where to look, and you got to focus on the highest quality stocks out there. And that is what we did for the best dividend stocks for July. You guys have a great holiday and have a great week. I'll see you next month.